Good morning, warriors. We were in the last class discussing about Pgbp, right? And we were discussing about section 37. We tried to understand the last part of the deductions where we came and said what and all items will be classified under section 37. To clarify that if at all you have not kind of covered any expenses in 30 to 36, you can cover it under 37 subject to some 5 conditions. Condition number 1, that you should have used the asset. You should be the owner of the expense. You should have incurred it in the previous year. You should have incurred it for business purposes. You should have not incurred it for revenue capital purposes. You should have not incurred it for personal purposes, and you should have not made an expense in the nature of offense or a penalty. Yes, this is what we discussed, and then we did some examples where we came and said that if you have any kind of expenses which are paid for premium of like keyman insurance, any kind of benefits or purposes given under violation, any kind of compounding fees paid, commission paid to directors, CSR expenses, donations paid, registration charges, interest payables under MSME. This is what we discussed in the last class. Moving forward to current class, we are trying to discuss as to what happens. We are going to now discuss as to what happens in some special scenarios. What are those scenarios is what we're going to discuss. Okay, what we're going to do is I'm going to give you some illustrations. You're going to tell me what is happening in that. I'm not going to write down, I'm just going to tell you, so you note it carefully. Okay, what is basically happening is, let's assume that I'm a person working in a company. What has happened is this company has got let's say we have made a sale of fixed assets. Okay, we've made a sale of fixed assets, and because of the sale of fixed assets, we got some money in hand. Question to you: the sale of fixed assets has resulted in a capital receipt or a revenue receipt? It has resulted in a capital receipt. Yes. Now what happened is I took that sale of fixed assets money and I started using it in my normal business. Okay, I paid some salaries, I paid some expenses, this and all that things. Okay, so basically, simple example, what is happening? You have fixed assets, you have sold the fixed assets, you've got money in hand. You use that money in hand and you made some normal revenue expenses. Assessing officer came before you and came and said, dear assessee, the money which you got is a capital receipt which is exempt from tax. You have used this money in order to make revenue expenses. You are trying to do a double deduction. Where capital receipts also you are claiming as exempt, and revenue expense also you are lowering your taxes. I'm sorry, I am not happy with this. So therefore, any expenditure which you made through a capital receipt, I want to disallow. This is what assessing officer says. Assessee comes and says, no sir, please understand, this might be a capital receipt, I'm not denying it. But there is nowhere in the act which comes and says that you cannot use long-term funds to make your payments. Yes or no? At the end of the day, you will keep doing business. Some items will be capital, some items will be revenue. Just because I'm having a capital item in my hand does not mean that I cannot use it for my revenue purposes. I have used this money wholly for my business, and therefore I am fully allowed as a deduction. Now there are two people before you, assessing officer and assessee. Who do you think is right? Yes. Question before you as a judge is, can capital receipt be used for making revenue expense payments? Can capital receipts be used for making revenue expenses? Yes or no? Hey, you understood the question? Didn't understand the question first? Understood? Yes. Tell me, yes or no is fine. I'll give you the final answer. Can you use, not use? You can use. So which means assessee is right. Okay. Britannia? Should not use. Sorry, come again?
No, so we cannot use, but not exactly sure what.
Okay, I'll ask you a simple question, Ritanya. Let's say, for example, you are right now incorporating a company. Okay, for you to incorporate a company, you need cash. You will pass an entry called?
Cash.
Very good. You've passed an entry called cash to capital. Now you have cash in hand. You're going to use this cash for doing what? Are you only going to invest in fixed assets, or you'll run your business also with it? If you're running a business along with it, which means you will incur revenue expenses. So you have used your capital money to run revenue expenses. Is it allowed, not allowed? Why? What is the difference? That is also capital receipt, no? You understand where I'm getting at? Yeah. See, understand, courts made a decision. Courts came and said, dear assessing officer, do understand that you cannot use this as a defense mechanism. You cannot use this as a defense mechanism. The source of the fund is never a criteria, because Income Tax Act has never come and tell that you should use a source of fund for a different logic. Okay, Income Tax Act only always has come and said that if you are having any kind of expense, I will tell you how to treat the expense. I have never come and debated about where is the source of this money. I have never come and debated about where is the source of money. If at all you want to talk about the source of money, there is already another chapter called as unexplained income. Yes or no? So for me, illegal source and legal source is a different criteria. But just because you have a capital source does not mean that you cannot use it for revenue operations, because that is ideally not possible. Okay, then in that case you are basically coming and saying that company should never incur losses. Think about it carefully. If a company is incurring losses more than the receipts which he had expenses. Correct. Now, if he had more expenses than the income, it obviously means that the expenses were sponsored by your capital receipts. You could have never had revenue receipts, because if you had revenue receipts, you would have always made a profit. Yes or no? You get my point? Yes. So understand, you can never have a scenario where you can come and say that the capital receipts should never be used for revenue items, because then in that case the company can never end up making losses, or should not end up making losses. At best, they will come and say if every time revenue receipt is going to help you make revenue payments, then at best you should have a profit or no profit, no loss scenario, which is never possible. Practically, it can never be done. Yes or no? Yes. Therefore, the courts came and decided that yes, you can use capital receipts for making revenue expenses. The source of fund is never a criteria. The source of fund is never a criteria. It is all about the expense. It is all about the expense. If the expense is not valid, you can disallow the expense. But you can never come and say that the source of the receipt is the criteria for your expenses. The source of receipt is criteria for your expenses. The logic is clear? Yes. Perfect. This is what is given in the next case law. This is what is given in the next case law, which is called as National Cooperative Development Corporation versus CIT. Okay, in which the Supreme Court made a decision that the capital receipts, even though it is used for business objectives, is fully used for the purpose of business. Capital receipts has nothing to do with your business. Has nothing to do with your business. As long as you have money and you have used it for your expenses of business, it is perfectly legal enough to claim. It is perfectly legal enough to claim. Yes or no? Yes or no? Perfect. These are some summaries which are given for you. It is not there in the study material, but I want to give it to you so that it makes more sense to you. Okay, the summaries are like this. First item, I'm coming and saying if at all you're planning to pay any interest or penalty, like we discussed last class, penalties are more mandatory, and therefore penalties are forever disallowed. Penalties are forever disallowed. But when it comes to interest is compensatory in nature. Interest is compensatory in nature, and therefore interest are allowed as a deduction. So therefore, if you see on the screen, penalties are disallowed because it is paid under income tax and other laws. It doesn't matter, because the moment they are paid, it is an expenditure for an offense. It is an expenditure for an offense. Coming to the interest part, interest under any other law is allowed as a deduction. Interest under any other law is allowed as a deduction. The interest under income tax is allowed as per 37. But we have a subsequent section which will come and violate it. So as of now, I will say allowed. When we go forward, we will come and say disallowed. Right now, it is allowed for you. Okay. So in simple words, any interest which you incur is allowed as a deduction. Any penalty which you incur is disallowed as a deduction. Next comes the question about late filing fee. See, understand, late filing fee is also compensatory. Okay, late filing fee is also compensatory. So technically, any late filing fee which you incur is also allowed as a deduction. But there is one exception. Not because it is valid, it is because ICA feels so. Okay, what is this exception? Basically, somewhere in 2018 of November, CA Interla, ICA gave a question saying, assessee has paid late filing fee for filing return late. Assessee has paid a late filing fee for filing return late. Are you allowed or not allowed? Many people said it is allowed because it is compensatory. In practical world also, we say it is allowed because it is compensatory. But for some reason, ICA came and said it is disallowed. It is disallowed. So in November 2018, CA Inter, not final, CA Inter, they came and said any kind of late filing fee which you pay for your return filing late, you will be disallowed for that expense. At the same time, when it comes to CA final, they use the same logic where they came and said you had paid a late filing fee, just that it was not for income tax return, it was there for TDS returns. Okay, so you made a late filing fee for TDS returns. In CA final, they asked whether it is allowed, not allowed. They said it is allowed. ICI itself in CA Inter has told something else, in CA finals has told something else. So this is a gray area. My request in exam, if at all a late filing fee comes, write both the assumptions. You feel like you want to disallow, you disallow. You feel like you want to allow, you allow. Doesn't matter. Write your suitable assumptions and go forward. Okay. If you want to answer it more specifically, I would say if it is an income tax return late filing fee, I say I would prefer disallow. If it is any other return late filing fee, you create it as allowed. Therefore, in the book, I have put it as like this. As per suggested answers of November 21 CA Inter, November 20, late filing fee under section 234F is disallowed. So I have put that out, which means any other late filing fee, you can claim it as allowed. Clear? Perfect. Going forward is the next kind of expenses called as issue and collection expenses, which means you're planning to do some securities issue. Whether you are allowed, not allowed is the question which has come up. See, generally in courts, the one decision which they have made is if you are going to increase your capital base, you disallow it. If you're going to increase your capital base, you disallow it. If you're not going to increase your capital base, you allow it. That is what the idea is. This is how generally the market understands. So they come and say, if you are incurring any kind of expenses which are going to increase your capital base, then it is a capital expenditure. If you're not going to increase your capital base, it is an revenue expenditure. This is what the idea is. Yes, that is why if you notice, I would have come and said, if you are going to issue or collect expenses in relation to debentures or buyback of capital or bonus issue, it is allowed as a deduction because it is an ITC hotels case law. If you are planning to do any kind of payments in relation to IPO means initial public offer, FPO, which means further public offer, and right shares, understand in all these three you are going to receive money for increasing your capital base. In these three cases, the expenditure will be disallowed. Again, not there in your study material, but from past exam questions this has come, so I am noting it down. What is the idea, Rahul? The idea is very simple. If your capital base is going to increase, you allow it as a deduction. If your capital base is not going to increase, you allow it as a deduction. If your capital base is going to increase, you will disallow it as a deduction. It will become a permanent loss. Because these capital expenditures are not in relation to assets. So you will not be able to claim a depreciation on it also. Okay, so these will become a permanent disallowance. Yes or no? Check and let me know if you didn't understand. Understood? Can we go forward? Yes? Okay. I'm going to put some case laws to you. Let me know how to answer it. Case law number 1. Yes. What has happened is, Rahul, there is a person called A. Yes, this person called A wanted to do a, marketing for him business. A person called A wanted to do marketing for his business. So what this person did is, he paid some money and got something called as a glow signboard. Have you heard about glow signboards? Yes. Glow signboards are basically when you go to this party halls and pubs and all, you will see on the top there will be one neon sign. Yes, in the neon sign the names and all will come, the lighting and all will go, it will be flashy and everything. You'll see this in multiple other places also. Hotels also will have it when it's in the outer area and all. Yes, that is called as a glow signboard. Do you know about it? Yes. Okay. So what has happened is, there is a person called A. He wanted to do some marketing and therefore he paid money and got a glow signboard which he put outside his office. For this he paid about 2 lakh rupees. Now what happened is, this person called A bought this glow signboard, paid 2 lakh rupees, claimed this full thing as a revenue expense. claim this full thing as a revenue expense. Assessing officer came and said, no boss, you have actually made a capital expense because this is an asset. You have made a capital expense because this is an asset. You are going to use this glow sign board for many years. You're going to use this glow sign board for many years. So therefore it is a capital expense. You cannot claim revenue expense. You can only claim depreciation. You can only claim depreciation. Assessee is coming and saying, no sir, you might think that it is going to be there forever. You might think it is going to be there forever, but glow sign boards are very particular, short life assets. Yes, because these expenses, these glow sign boards needs regular repairs. It will not be there for very long time because it's lighting and everything. No, so lighting and all gets fused very faster. So he was like, sir, the assets and all life will not be so much, but will actually have a lower life. At the same time, these and all require a lot of maintenance. So I keep incurring a lot of revenue charges. Therefore, for me, this is a revenue expense. I am not going to get any benefits out of it. Assessing officer did not agree to it. He decided to make this a capital expense and claim expenditure. Question to you as the judge. Is it a capital expense or a revenue expense? Yes. Are you in favor of Mr. A or are you in favor of assessing officer? Will you treat the glow sign board as a capital expense or a revenue expense? You'll treat it as? Why, ma? Asset has a short lifetime, okay? Okay. So you will spend regularly on this asset and therefore it is a revenue expense. Okay. Yes, understand. The courts also agreed to it. They came and said, dear assessing officer, I do understand that you have taken a glow sign board, you have paid some huge expenses, but at the end of the day, these glow sign boards are very delicate items. Okay, these are very delicate items. You actually start incurring a lot of expenses the moment you take this into your asset itself. Okay, because sometimes one of the boards will not work, sometimes one of the letters will not work, sometimes repairs and all will be too high, sometimes lights will go off. Lot of expenses keep incurring for these glow sign boards. At the same time, this is once installed is not going to help you in any way. Because tomorrow if you install this glow sign board, people are not interested about the sign, people are interested about the name. Yes, so it is not going to give you any enduring benefit other than displaying your name. It was a decision of the assessee to show this because he was okay with that much expense. That does not mean that it's a capital expense because there is no long-term benefits coming out of it. The shelf life itself is very small. And therefore the decision came saying that this is a revenue expense. Clear, not clear? Clear? Yes. Great. Case law number 2. Case law number 2. What happened is, I am working in a company. I am a part of the business development team. The business development team has made a decision that we want to venture into a new business. Let's say, for example, I'm working in a maybe mobile industry. I'm planning to venture into a new business where I'm coming and saying that today I want to make the mobile foldable. So therefore I am venturing into a business where the mobile will start folding itself. Okay, so I wanted to buy some businesses accordingly. I was not sure which business should buy it to. So what I did is I did a market research. We call it as feasibility study. What do we call it as? We call it as feasibility study. Okay, so what happened is, there is a person called A. He entered into a feasibility study for a new business venture, for which he incurred, let's say, 10 lakh rupees. He incurred a 10 lakh rupees cost. Now what happened is, after he incurred this feasibility study money, unfortunately the project could not materialize. Okay, because right now today we don't have so much of technology that we can make foldable phones. So therefore what happened is, he could not go through with the project got abandoned. abandoned, but actually speaking, he made the payment of 10 lakhs. He made the payment of 10 lakhs. So what happened is he took this 10 lakh rupees and claimed a revenue expense. He took this 10 lakh rupees and claimed a revenue expense. He claimed a revenue expense. Assessing officer came and said that no, dear assessee, you have done a big R&D. You have done a big R&D. This is an R&D cost. This is an R&D cost. It doesn't matter whether the project materialized or not. It doesn't matter whether the project materialized or not. You actually incurred a lot of R&D cost. You actually incurred a lot of R&D cost. It is not feasible for me to allow this as a reduction to you. I will rather treat this R&D cost as an intangible asset. I'll treat it as an intangible asset and allow you depreciation. Yes. So assessing officer is saying this expense should be capitalized and allowed depreciation. You are saying, sir, project details did not crystallize. It's an abandoned project. Therefore, I want to claim it as revenue expense. You are the judge. Allow, not allow. Allowed. Why, ma?
Because this expense did not materialize to create any benefit in the future also.
Okay.
Ultimately, a loss only for the company. They are not going to get anything out of it.
Okay.
If they had been benefited, then they will subsequently have made the investment, and this can also be capitalized.
I see. So question to you is like this, Ritanya. You are today standing and you are going to prepare a feasibility study, right? Now, when you're going to prepare a feasibility study, do you think the feasibility study will be completed in 1 month, 2 months, or will it take years? It will take years, right? Now, if it's going to take years, 3 years later, you may probably know that the project will become successful, non-successful. Can today you make a decision whether it will become successful, non-successful? So how do you make a decision today whether it should be allowed or not, revenue or capital? Yeah. If you recall your accounting standards in Inter, we had an accounting standard called as AS26 talking about intangible assets. This AS26 of intangible assets actually comes and says that whenever you have any R&D expenses, to the extent the expenses pertaining to research, to the extent the expense pertains to research, these expenses are always supposed to be revenue. Or should be charged to P&L even if the project becomes successful or non-successful, because when you tried to incur the expense, you were not certain that the project will go through, and therefore AS26 comes and says that you should treat it as a revenue expense. It is only the development cost which is capitalized. Have you read this? Not read this? Yes, that is what the idea is. Income tax courts held that this will also be a revenue expense. Because the business is existing. You tried to do a feasibility study. The feasibility study did not materialize. The project itself is not in place. There is no point of you creating an asset. And therefore they said it is allowed as a deduction. Yes or no? Yes. Great. Case law number 3. This is a bit of a funny case law, so I want your attention. What happened is there was an advocate. The advocate was into all the Supreme Court hearings and High Court hearings. He was a very big advocate. What happened is suddenly one day when he was going to his hearing, he ended up getting a heart attack. Was immediately hospitalized. For that heart attack, he had to go through a bypass surgery, and therefore he incurred some 50 lakh rupees. What this lawyer did is he took this 50 lakh rupees and put it off in the P&L of the firm. Stating that, sir, this expenses were incurred wholly and exclusively for the business. Assessing officer said, it is your heart, it is your expense. How did it incur for the business? The lawyer came and said, sir, I am a lawyer, profession by nature. the whole business itself runs based on my well-being and my skills, based on my well-being and my skills, and therefore this heart of mine is an asset for the firm. What is it? It is an asset for the firm. Since it is an asset for the firm, the expenses which I incurred are basically my repair charges for my asset. These are my repair charges for my asset, which is pertaining to the business. Since I incurred a repair charges wholly and exclusively for the business, I am allowed as a deduction. Because for me, what? For me, my heart is an asset to the firm. You are the judge. This case has come to you, where the advocate is saying this is an asset and you have incurred repair charges. Will you allow it in advocate's favor, or will you allow it in assessing officer's favor? ஏமா என்ன பிரச்சனை? I am a professional ma. எனக்கு பொறுத்த வரைக்கும் that is what is important.
No, sir, like if we have certain, what are the classes and what we every block.
ஆமா, this will be a plant and machinery. ஏமா என்ன பிரச்சனை? Why can't it be a plant and machinery? I mean, I told you, no, plant and machinery is a garbage section. If there is an asset which is worthwhile to you, everything will go into plant and machinery. What is wrong in that?
Whether no,
Normally,
you mentioned also.
okay. So the question to you, Gayatri, if I actually capitalize an heart as an asset, will then you give me the deduction? Nalika, if I want to do this, if you're telling me that if you had recognized this as an asset, I would have given you deduction. I will pass an entry called heart account debit to capital account. Putruviya? Okay. So as per you, assessing officer is right.
Sir, they cannot say this as a recent debt because then even entrepreneurs will tell because of my foundation, my base only the company got developed. I am the asset of the company.
See,
just because profession needs.
I don't deny it. The question is, as a judge, Britannia, if you are a judge of a court, do you think your defense would be the fact that everyone else could also start doing this, therefore I will not allow? Or your defense would more be like, tell me why should I not allow? Okay, if you come and start using your defense saying that if everyone else will start doing it and I will also doing it, it's like that comedy which your parents will say, no, if everyone else is going to fall into the well, you also fall into the well, andamari, right? That's not the way to do it. No, as a judge, you would not like to put your claims before someone stating that it is something which others will also do. I want to know what you are doing. Think from your side independently. If I have brought the scenario before you as a judge, what will be your answer? Yeah? No? Can I answer it for you? Yes, I'll ask you simple questions. I'll ask you certain simple questions. Tell me what is the answer to those questions. Okay. Question number one. First of all, have you shown this asset in your books? No. Can you show this asset in your books? Can you show this asset in your books? No. Again, no. Because for you to show an asset in your books, you need a value. Yes or no? Can you determine the value of your heart? No, you can't determine the value of the art. So first of all, if you remember accounts would come and say asset means something which has a value, has the control over it and can be used for getting an enduring benefit. Yes or no? So you do not have a value itself to assign to it. So therefore it cannot be called as an asset, first of all. Okay. Second of all, the courts came and asked the assessee a very simple question. Tell me, dear assessee, you are running a firm and you're telling this is an asset to the firm. This is an asset to the firm. Are you the only partner in the firm or you have multiple partners? You have multiple partners, yes. So which means today, if the other partner comes and says that he is in need of a heart, he is in need of a heart, he also has a right over your heart. In that scenario, will you give your heart to him or not give your heart to him? Will you give your heart to him, not give your heart to him? You'll obviously not give your heart to him, which means, does this look like an asset which is of the firm, or does it look more like a personal asset? Looks more like a personal asset. When it looks more like a personal asset, do you think you can claim this as a business expense? No. That is what the answer is. So any kind of repairs to heart will also not be allowed as a deduction.
So that last question which you asked, if it is not being a firm and it is only a sole proprietorship,
Then it is obvious, no? Then it's always a personal expense. Can you ever have an asset of yours which you can call it as a business expense? Yes. Yeah, this is the third case law. Clear till here? Clear till here? Yes. Fourth case law. Fourth case law. Another interesting case law. Tell me what you understand. Tell me what you understand. Basically, what happened is, I am a person who has created a movie theater. What have I done? I've created a movie theater, and I was running this movie theater patiently. Now, what happened is, when I was running this movie theater, suddenly from the back came some local gundas. And those local gundas came and said, "Oh, you have created a new movie theater. Do you know that this is my area? If you want to run a movie theater here, you have to give me some protection money." What money? Protection money. The assessee came and asked, "Sir, protection money, na, whom am I getting protected against? They said, "You are getting protected from me itself. Okay, so you are going to pay me protection money for me to save you from myself. So what happened is, gundas came to you. Gundas came and said, "I want some protection money if you want to save your movie theater. You, at a certain point of time, were not happy. But you wanted to somehow run your business peacefully. Yes or no? So what happened is, initially 1 or 2 months you gave him the money. Let's say 10,000 per month you were giving him protection money. Okay. Third month, what happened is, your business was actually doing really well. So what happened is, this person came back to you and he came and said, "Boss, I don't want 10,000, I want 1 lakh. You were like, "Sir, per month and all, 1 lakh if I give you, movie theater I have to shut down. So I'm sorry, sir, 1 lakh is not possible. From the next day, movie theater stopped working properly, because gundas used to start coming, start teasing people, start throwing things around, start breaking things around. Everything became an issue. You were also tired. What will you do? You went and approached the police officers. The local police officers, you went to him and you came and said, "Dear police officers, there is this gunda who is coming to my movie theater every single day and he's breaking everything around. I am not able to run my business properly. This police officer also came and said, "Yes, we will look into it, don't worry," and he left. Did not come back. You were also trying to understand why this guy is not coming and doing your work properly. Partha, the police officer, was a friend of the gunda. So what happened is, he was also not ready to support. You silently went to the police officer and you came and said, "Sir, please help, sir. This is very difficult for me. I cannot run my business like this. I will have to shut down everything. Do me some favor. Police officer came and said, "Don't worry, pa. I will handle him. The only thing is, no, I also have to get ready, because if I have to go and fight police or gundas and everything, I need some equipments, I need some products, I need some weapons and all. Summa, I cannot go and fight with him, otherwise I'll get killed. So I need to prepare myself, go with all gears and everything. So I need some money. Indirectly, police officer is asking, bribe. Indirectly, police officer asking bribe. So you also came and asked, "Sir, how much do you want?" He said, "Pa, 30,000 rupees. You were thinking, better than giving 1 lakh rupees to gunda, might as well give 30,000 to police officer. You said, okay sir, no problem, I will equip all, I will give you money for buying all the equipments. You gave him 30,000 rupees. From the next day, the gundas stopped coming. The gundas stopped coming. Life is sorted, you're running your business. Life sorted, you're running your business. Now, you in your P&L claimed the expense of payments made to gunda, how much? 10,000, 10,000, 20,000, and payments made to police officers 30,000. So you have claimed two expenses. Gundas protection money. How much? 20,000. And police officers equipment support. Police officers equipment support, you claimed 30,000. You claimed 30,000. You claimed the whole thing in a P&L. You claimed the whole thing in P&L. Assessing officer says, no, boss, this and all cannot be claimed. This and all cannot be claimed. So therefore, he disallowed all the payments. He disallowed all the payments. Now you both are standing before the court. You are the judge. The assessing officer and assessee are standing before the court. You are the judge. This has come to you. Two payments. One is called as gundas protection money. The other is called as police officers equipment support. 50,000 rupees is it in the P&L. As a judge, will you allow? Not allow? Huh?
Bribe is not allowed.
So you're saying police officer not allowed? Okay.
Because it is not allowed.
Had you not paid the money, you would have not been able to run business. Okay. The gunda one? The gunda one is allowed, not allowed? Think quickly. Allowed, not allowed? Gayatri? Sorry, ma? Yeah, ma, ena prashna?
It's like upper or it is like if I'm not going to give you some money, come let's start making it's like offense for paying for offense.
Offense. What law is your offense, ma? In which of the laws do you come and see the fact that someone comes and says gundas ka paper na the illegal money? Have you read any law like that? No? Okay. This is also disallowed. This is also disallowed. Now do understand, while yes, I do agree to the fact that you are actually not having any specific law which prohibits payments to gundas. You're not having any specific laws which prohibits payments to gundas. This is an illegal gratification. This is an illegal gratification. You're trying to satisfy someone's ego. You're trying to satisfy someone's ego. This is an illegal gratification given to a gunda and technically is not for the purpose of business. It's not for the purpose of business. This is as good as you giving a donation money. It is as good as you giving a donation money, and therefore it will be disallowed. Therefore it will be disallowed. Rahul, why the police officer thing is disallowed? Same logic. Understand? Police officers are governed by government officers. Okay, they have a special act for them. They have a special act for them, and as per that act, it is their responsibility and obligation to help every person in need. It is their obligation and responsibility to help every person in need. You cannot be asking or making payments to these people for that kind of support. Government is already paying them enough money for doing that, so government should be the only sole responsible person to be paying money to police officers. You should not be the person contributing to it. Okay, so even though you made a payment to police officers, while it may have really helped you run your business, I'm not denying that fact, but still it will not be allowed as a deduction because it is an illegal gratification. Yes or no? Yes or no? Yes. These are your 4 case laws which are notified by ICAI. These are your 4 case laws which are notified by ICAI. Let's read those case laws and let's see if you understand the answers. If you don't understand the logics, please take down the example. Okay, please take down the example. The case laws come and say any kind of expenditure which is incurred on glow sign boards shall be treated as revenue expenditure as the life of the asset is very short. There is a replacement expenses recurring almost every year, and these boards do not bring into existence any asset or advantage of enduring benefits. The case law is from CAT versus Orient Ceramics and Industries Limited, Delhi High Court. Case law number 1. Yes. Case law number 2. Expenditure incurred on feasibility study conducted for examining proposals for a business which was subsequently abandoned would be considered as a revenue expenditure as there is no creation of an asset. So if you have incurred any kind of expenses where the subsequent project has been abandoned, it will be called as a revenue expense. It will be called as a revenue expense because there is no creation of an asset. The case law name is CIT versus Priya Village Roadshows. CIT versus Priya Village Roadshows. Hey, read the person's name. No, what is the person's name? What is the person's name? It's called as Priya Village Roadshows. Do you know who this person is? Have you heard about this person in the past? Anywhere? No? Take the person's name and shorten it out. Shorten it out. Make an abbreviation out of it. What is the abbreviation for this, ma? It is Priya Village Roadshows. Now have you heard the company's name? Now have you heard the company's name? Yes. PVR Cinemas, which you see very famously in the market, is actually Priya Village Roadshows. Is actually Priya Village Roadshows. Priya Village Roadshows was a very, very fancy band which used to go around markets and do all these road shows and all, basically doing this Ramayana, Mahabharata and all those kind of road shows, and they earned enormous money in that. Okay, so the woman named Priya ran a band and she earned enormous money in that. With that enormous money, she then eventually decided to move into cinemas, which is when was created this very famous movie theaters which you see right now in the market called as PVR. Yes, obviously, if you try to run a cinemas called as Priya Village Roadshow Cinemas, no one will come. So therefore, they shortened the name and they made it now PVR. They made it now PVR so that people come and watch the cinemas. If you actually go and look at the full form in the MOAs and AOAs, you will find this company's name as Priya Village Roadshows. Ketrikingla Munadi? No? Have you heard examples like these in the past? You have the very famous place called as ITC. Very famous place called as ITC. Ketrikingla? Yes. Do you know the full form of ITC? Anyone? Have you heard about the full form of ITC? No? ITC. Sorry, ma, try again. ITC Chola is the hotel name, ma. Okay, Chola is just a name given to the hotel. It's not the brand full name. It's never called as IT Chola. It is called as ITC Chola. Okay, so the hotel name is called as Chola. No. ITC full form is called as Indian Tobacco Company. What company? Indian Tobacco Company. For those who know, ITC actually is a tobacco industry. ITC is actually a tobacco industry. It was lifelong into tobacco business. It was lifelong into tobacco business. Later on, what happened is when the money became too much, they started venturing into other businesses. Which is when came hotels and FMCG products. When they started venturing into that businesses, obviously using the name as Indian Tobacco Company is not going to get you the market. So therefore they shortened the name and they called it now ITC. You have all been buying items from ITC. You have all been living in hotels of ITC, but I've never understood the fact that ITC actually means tobacco. ITC actually means tobacco. They still run tobacco business and it's still a profitable business. For those who actually realize, ITC hotels are actually doing losses. Okay, the major industry where the ITC earns a huge profit is tobacco business. It's a pure harmful product business, but still the majority of the revenue comes from ITC tobaccos, followed by FMCG, and hotels are still a loss-making entity. Hotels are still a loss-making entity. These are all some extra facts for you to know, just so you go into the market. Okay, be careful about it. Yeah. In simple words, no, if you are not able to run your business properly, you don't know how to fancy your name yourself, and you feel like you have done something wrong, but you want to start a new life, the very easiest thing is to change your name into a short form. Okay, as long as your name is short into a short form, people will not even know about your past, and you will get a fresh start. That is what the idea is. That is how Priya Village Roadshow started. That is how ITC also started. These are all very famous brands right now, started from a very low background, but the name was not so suitable for becoming a big brand, so they shortened the name, and now it's a very big brand. Yes, many industries like this you will notice, where you see short forms and you don't know the full form of short forms, no, you will realize that the short form is very bad. I mean, the full form is so bad that they cannot actually grow with that. So therefore they change it into short forms and then they run a business. Yes or no? Yes. Anyway, not for your exams, just to give you a hindsight. In exam, in case this comes and you remember the case law, don't quote PVR. You have to write the full form, called as Priya Village Roadshows. This case law is back in the times when it was actually Priya Village Roadshows. It is not of today. Today it might be called PVR, but this is a case law very long back. Okay. Next, expenditure incurred on heart surgery of a lawyer of a firm cannot be allowed as a business expenditure, as the heart is not an asset shown in the balance sheet, nor is it a business tool under the definition of plant. The person who made this nonsense claim is called as Mr. Shanti Bhushan. Shanti Bhushan went before the officers and came and said, my heart is my asset. Give me the deduction for it. They said, I'm sorry, it is not allowed as a deduction. Yes. And the last case law for you, it says payment made to police and gundas to keep away from the cinema theaters are in the nature of bribery and illegal gratification, and hence is not allowed as a deduction. The case law is Mr. Neelavati and others, Karnataka High Court. These are your 4 case laws for section 37. A, is the case laws clear?
Sir, and also if they receive bribery,
Yep.
the police generally they will not disclose it also.
Who will not disclose, no?
Police.
Why will police have to disclose? You will disclose, no? It's your payment.
No, I mean income.
Purilla, Tripiva?
Police income anyway not disclose bribery.
Okay, so just because the other person does not disclose, do you think you'll not claim an expense?
No, we can. Not like that, but I'm telling you.
Yeah, obviously. The point is, he will obviously not do it because it's illegal for him. The point is, even if he has to do it, you have to show it under IFOS. Right? So that's anyway not happening. And at the end of the day, you don't go and make payments to police officers in bank account and all. It's going to be pure cash. So it's obviously not going to be disclosed. That's very apparent. And that's the same thing for gundas also. I mean, at the end of the day, which gunda have you seen filing returns and all in India?
But they don't even tell, but these people have to file and they have to.
Technically, yes. I'm not denying it. But yeah. I mean, the point is very simple, no, Ritanya. Tomorrow, I am not bothered about what you do in your books. Okay, for me, it is an expense, so I want to claim as a deduction. You disclose, not disclose is your headache, not my headache. I do not care about all those items. Right, so I mean, at any point of time, I will not take a defense mechanism that the other person has not filed a return, so therefore I will take a hit. Because then in that case, it will become very difficult for me to do the business. Right, I cannot come and sit and start following up with every single person to understand if he's filed a return or not. So I'm more bothered about my expense. I'm not bothered about his expense. Yeah. Awesome. Great. With this, we are also done with section number 37. I hope there is no doubts. Can we go forward? Yes. Perfect. With the formats getting done, in the formats, if you remember, we had 4 kinds of things in the format. One was called as net profit. Then it was called as add disallowances, add deemed income, less deductions, and less income from other heads. I told you we are going to start with deductions, and that's what we have concluded right now. We have done from 30 to 37. We have done from 30 to 37. These were all your deduction items. Can we go forward? Yes. In the format, I told you I am not going to discuss about income taxable under other heads, because that is anyway to be understood from other heads. It's not something which I have to bother about. It is not something which is clarified also. Yes. So that is not a part of our discussion. Next is called as deemed income. For me, there is nothing for me to discuss in deemed income because we've already done it. When we did deductions, if you remember, we did sale of assets, sale of scientific research assets, sale of specified business assets, sale of that license fees and all. Those are all your deemed income. Those are all your deemed income. So we have already done that parallelly. So we are also done with what is called as deemed income. Leaves us with the last topic of PGBP called as disallowances or inadmissible deductions. Disallowances or inadmissible deductions. We are moving to section 40. Yes, Rahul, now what is this section 40? What is the section 40 and forward? Income tax is coming and saying, boss, I showed you a list of P&L items. And I told you everything which is falling under 30 to 36, no problem. Anything which is not falling in 30 to 36, you're moving to 37. So therefore also no problem. Technically, every expense which you have, if it is for business, you are getting a claim. But income tax also came and said that, boss, there are some expenses which I know it is genuinely for your business. It is genuinely because you have done it. But there are some issues. I wanted you to satisfy certain conditions, but for some reason you're not ready to do that. You're not ready to satisfy the conditions I'm giving it to you, because of which I'm not happy with you. And therefore, even though it is an expense for you, even though it is a business expense for you, I still do not want to give you the deduction of that expense, because you have not satisfied some rules which I put forth to you. I have not satisfied some rules which I have put forth to you, and therefore I am disallowing it. This is called as inadmissible deductions. Now, question to you. I have made a salary payment. Of rupees 1 lakh. Hey, this salary payment is allowed under what section? Salary payment is allowed under what section, ma? It is allowed under section 37. Now, what happened is I made a salary payment. It is allowed as deduction under section 37. But what happened is there are some rules which I asked you to follow. I told you to follow this, I told you to follow that, and you did not follow those. Income tax said it is not allowed. For example, they are coming and saying you did not pay TDS. So because you did not pay TDS, I am disallowing this 1 lakh for you under section 40AI. Now, question to you. One section says it is allowed under 37. One section says it is disallowed under 40AI. Which one will you follow? Will you follow 37 or will you follow 40AI?
40AI.
Why will you follow 40AI? I mean, it's not specific exactly. The reason you will follow 40AI is because this sections which we are going to discuss going forward are non-obstante clauses. What are they? Non-obstante clauses. When we started this subject, we had discussed about this. There are some things called as non-obstant clauses. What is it? Non-obstant clauses. Rahul, what does non-obstant clause means? It means that, yes, I do agree, something could have been allowed to you as a deduction. But I feel that I do not want to do it. Which means, do I hold more powers than you, or you hold more powers than me? Does 40AI hold more powers than 37, or 37 holds more power than 40AI? 40AI holds more powers than 37, and so therefore 40AI starts with the non-obstante clause. How to understand, Rahul, whether it's a non-obstante clause? Any law, if it starts with the word saying notwithstanding, it means that I do not care what is there on the top or earlier. If I have come and used the word notwithstanding, it means that ignoring the other provisions follow me. If you recall, we also discussed this when we did rates of taxes. There I came and told you, generally rates are given under Finance Act. But if you have special incomes like capital gains, winnings, VDA and all those things, those sections start with a notwithstanding clause. They start with the notwithstanding clause. So therefore, those sections become superior than the other sections. Those sections become superior than the other sections. Every section which we are going to read right now, starts with the wordings as notwithstanding anything contained in section 30 to 38. Notwithstanding anything contained in section 30 to 38, which means they are coming and saying, ignoring what is there in 30 to 38, if you do not satisfy my conditions, I will disallow even if it is allowed there. I will disallow even if it is allowed there, which means 40 is a superior section or an inferior section. 40 is an superior section. Rahul, what if I wanted to make an inferior section? What if I wanted to make an inferior section? Inferior section like section 37. Inferior section like section 37 starts with the words saying subject to the provisions of 30 to 36. Subject to the provisions of 30 to 36. Now ask yourself a simple question. If an expense is already given in 35, as not allowable, can you use 37 and come and say allowable? Can you use 37 and say allowable? No. Why can't you do it? Because 37 is an inferior section. Rahul, how did you find out that 37 is an inferior section? The heading says subject to the provisions of 30 to 36. The moment you use the word subject to, it means this will only be looked into if 30 to 36 is not satisfied. This only will be looked into if 30 to 36 is not satisfied. If 30 to 36 has a specific clause, you will follow those clauses. Only if it is not there, then it will come to 37. So section 40 and above are called as non-obstante clause. 37 is called as an inferior clause or a subject to clause Going forward, whenever you read a law, always notice the starting point. Starting, if you see the word notwithstanding anything contained, it means that section is a superior section. If you start with the word subject to, it means it is an inferior section. Clear? Not clear? Yes. I'm teaching you some interpretation of laws, just keep this in mind. Okay, it's not relevant from exam, but it's good to know. Yes. So I am starting with what is called as inadmissible deductions. These deductions are overriding deductions vis-a-vis your actual deductions, and therefore all these deductions start with a notwithstanding clause. This one comes and says notwithstanding anything contained in 30 to 38. For those who are thinking, Rahul, we only did 37 right now, where is 38? We already did 38 also. When we were doing 30 and 31, that time I came and told you, if you incur any kind of personal expenses, the personal expenses will be disallowed for you, whereas same asset is used both for personal and business, proportionately disallow personal. All this is given in section 38. Section 38 comes and clarifies that if at all a same expense is incurred both for business and for personal, to the extent the expense relates to personal, you will disallow. So this is given under 38, so we don't have to worry about 38. Is 39 there in syllabus, Rahul? No, 39 is not there in syllabus. Comes to section 40. We are starting with section 40. Good to go? Yes. Starting with the first section in section 40, we are starting with section 40A. Under 40A, we are discussing about 40AI and 40AIA. 40AI and 40IA. You may have already done this in your inter, but just so you have forgot, let me come and tell you. We are talking now about something called as TDS. We are now talking about something called as TDS. TDS in full form means tax deducted at source. What is tax deducted at source, Rahul? Let's say there is a person called A and a person called B. A has decided to make a payment to B for 1 lakh. A has decided to make a payment to B for rupees 1 lakh because he's provided some services. Income tax is saying that if you're planning to make the payment of 1 lakh to B, do not make the 1 lakh payment to B. Assuming the rate is 10%, give 10% to government directly. And balance 90% is what you can pay to him. Balance 90% is what you can pay to him. A is now having obligation to make two payments. One payment of 10,000 will go to government. The other payment of 90,000 will go to B. The other payment of 90,000 will go to B. This 10% which is planned to be made to government is called as TDS. Is called as TDS. Yes. Now income tax comes and says that whenever there is a payment happening from A to B and it is covered in a specific section, you need to do TDS. But imagine as an Indian, your question at the time when someone tells you to do something will be that should I follow this, or you will ask what happens if I don't follow. Normal Indians, no, we never come and follow something given just like that. We never come and do something just like that. We will come and say, boss, I don't want to do. Tell me what will you do? We are always into the reactive scenario. Yes or no? So, as a person, I went to assessing officer. I went to the department and I came and said, sir, you are asking me to pay 10% to you and balance 90% to B. I am not interested, sir. Not in the mood to do it, because understand, I had to make one GPay payment to B. Life would have been easy. One GPay payment to B, all payment done. One GPay payment to B, all B payment done. Now, you are coming and saying, Rahul, 10,000 you give to government, 90,000 you pay to B. Two work you are giving me, two payments I have to do. At the same time, tomorrow when I make the payment to government, I have to also come and tell this is from B, which means I have to file returns, I have to file notifications, I have to give forms and everything. Looks easy, looks difficult. Looks difficult. Yes or no? So, I am coming and saying, dear sir, too much of a complication. I unnecessary making you one more payment. I making one payment to him. Too much problem, sir. I am not bothered or interested to do all this nonsense. You handle it yourself with him. It is his income, sir. It is not even my income. For me, it is an expense, and I know it is a genuine expense. There is nothing which is illegal about this also. I don't want to take care of all this complication, tedious and all. You handle it with him, sir. So I said, sir, I do not want to do. You tell me what will you do. I do not want to do. You tell me what you will do. Government said, if you do not end up making the TDS payment which I have asked you to do, you were so proud of your expenses, right? I will take away the expense from you. The expense which you were so proud of, I will take away the expense from you. You will come and say, no, sir, actually this expense is genuine only, business expense, everything satisfied, revenue, personal, business, everything is perfectly done, sir. There is no conditions violation. He says, I don't care. Even though it was the most genuine expense you have ever made in your life, I will still disallow it for you because you have not done the TDS payments. This is what is given under section 40A. Section 40A comes and says that if you are a person who has been obligated to deduct TDS on a payment you are going to make, please ensure that you do the TDS. If you do not do the TDS, the expenses which you were so proud of and you wanted to claim as a deduction, I will disallow the expenses. Rahul, how much will you disallow? I said, if you are planning to make the payment to a resident, I will disallow 30%, and if you are planning to make the payment to a non-resident, I will disallow 100%. 30% of what, Rahul? 30% of expense. 100% of expense. I will disallow 100% of expense. Rahul, what is this 30 and 100 logic? The logic is very simple. Understand, if you are a non-resident payment maker, if you are making a payment to a non-resident, the non-resident, if you do not do TDS, do you think normally a non-resident will come down to India and pay taxes? Do you think a non-resident will normally come down to India and pay taxes? No. So they came and said, boss, a non-resident is not going to come down and make payment of taxes. It has become too complicated for an assessing officer to go and collect taxes from him. So instead of he paying the taxes, do one thing, I will disallow the expense for you. If I disallow the expense, technically what is happening? He would have paid tax on that income. Now you are paying tax on that income, means the same. So they said, I will disallow 100% of the expense to you. 100% of the expense to you. Yes or no? Yes or no? Rahul, what is the resident logic? They are saying, Rahul, since you have not paid TDS for that person, in all likelihood, this person may not disclose this income to me, and so may not end up paying taxes to me. If he does not end up paying taxes to me, I might collect it from him in the future. But I may end up losing 30% of the income right now, because that is what is the base rate of tax, correct or not? Maximum rate of tax is 30%. So they came and said, boss, I may end up losing 30% of tax of that income right now. Eventually in the future, I may get it back. So right now I am disallowing 30% of your expense. The tax component which I could not collect from this person, I am disallowing it for you. This is what the idea was. At the end of the day, these might be the logic, this may not be the logic, but this is how the understanding is. Income tax comes and says, if you are a person who's liable to pay TDS on behalf of another person and you have missed to do so, you will be disallowed 100% of the expense in case you make the payment to a non-resident, and you will be disallowed 30% of the expense in case you make the payment to a resident. Rahul, is this permanent or temporary? This is a temporary disallowance. What is this? This is a temporary disallowance. In case in the future, if you go and tell the government that, sir, I have followed everything you asked me, just that I am a little late, I did follow this in the future, government will say no problem. In the year in which you followed it for me, that year I will give you the deduction. Yes or no? So simple logic. I will disallow the payment today because of non-want of TDS, and will allow the payment in the year in which you have actually done the TDS compliances. Yes or no? Yes, Rahul. I have decided that I wanted to make a 1 lakh payment to B. Income tax is saying deduct TDS. The first question I'll ask him is, sir, when should you want me to deduct TDS? Income tax said, don't worry, as long as you deduct the TDS by the end of previous year. As long as you deduct the TDS by the end of the previous year, I am okay. So I am giving you time until the end of the previous year for you to deduct TDS on me. And now, Rahul, A went to B and said, B, I have a payment of 1 lakh to do to you. I am deducting TDS for you. B also said, okay, no problem. This is a government law, so go ahead and do it. So A ended up deducting 10,000 from B's payment. And what he did is he took the money, kept it with himself. Never paid the money to government. Hey, have you cheated government? Not cheated government. You have cheated government. You have told someone else that you are going to make a tax payment to government, but you have never paid the money to government. You have technically cheated the government. Yes or no? Now, government came and said, boss, it is not just enough for you to deduct the TDS. It is also important for you to deposit this TDS to me. Yes. So therefore, they came and said, you should do two things. Thing number one, you should deduct the TDS by the end of the previous year. And you should deposit the TDS to me. Now, question which came up is, Rahul, I want to deposit TDS. Can I deposit it 2 years later? But claim deduction today? Can I file my return today and come and say, sir, I am filing my return with the promise that 2 years later I will deposit the TDS? Will government be okay? Not okay. It will be not okay. So government came and said, no, Ra, before you want to claim this deduction, you have to prove it to me that you have made the payment. Before you want to claim this deduction, you have to prove it to me that you are making the payment. So government came and said, the maximum time I can give you is the due date of return filing. The maximum time I can give you is due date of return filing. Hey, where have you learned this earlier? Ma? Where have we seen due date of return filing and all earlier? We have seen this in employer contribution to PF. We have seen this in employer contribution to PF, where we came and said if you have an employer contribution to PF, make the payment by the due date of return filing. Here also same logics. I'm coming and saying if you have planned to keep TDS with you, you should deposit the TDS to me within the due date of return filing. Hey, is this provision clear? Not clear? Yes, these are some very important examples which come in exam, so be very careful. Let me know if you're not clear. All clear? Perfect. Yes, we're going to read the theory together and let's see if you understand this. Okay, we're reading at section 40AI and 40AIA. The section comes and says 40AI covers all kinds of payments which are made to a non-resident non-corporates or all foreign companies in India or any payments made outside India, and 40AIA comes and says any kind of payments made to a resident. The provisions are coming and saying whenever you're liable for TDS, as per TDS chapter, the disallowance will be triggered if the TDS has not been deducted by the end of the previous year. If the TDS has not been deducted by the end of the previous year, or if the TDS was deducted in the previous year but not deposited on or before the due date of filing the return of income. If you violate these conditions, 100% of the expenditure will be allowed in case of a non-resident and 30% of the expense will be disallowed in case of a resident. And I told you, if you have disallowed it right now, no problem. You can claim it as a deduction in the year in which you pay the TDS. You can claim the deduction in the year in which you pay the TDS to the government. Yes or no? Is the section clear? Yes. Can we go forward? Yes. What I'm going to do is I'm going to show you an example. You are going to help me with the example. You're going to tell me whether Rahul the conditions are satisfied or not satisfied, and if not satisfied, when can you claim the deduction? Okay. Yes. I'm in case number 1. I'm saying in previous year 23-24 I incurred an expense. I deposited the TDS. I deducted the TDS on 21st October 23 and I deposited the TDS on 7th November 23. Just for your convenience, I have also told you that the due date of return filing is 30th November. Transfer pricing case. Okay, you're a transfer pricing case. You're filing the return by 30th November. This is the facts. You're in case number 1. You have deducted the TDS on 21st October 23 and deposited on 7th November 23. Ask yourself, have you satisfied the conditions? Condition number 1, you should have deducted the TDS before the end of the previous year. You are in previous year 23-24. Therefore, the end of the previous year will be, what is your end of the previous year? 31st March 2024. Very good. Yes. So I am coming and saying that you should deposit the TDS by 31st March, deduct the TDS by 31st March 2024. Hey, have you deducted by 31st March 24? Yes. If you have deducted by 31st March 24, income tax comes and says deposited by the due date of return filing. I am telling you that the due date is 30th November. 30th November what? 2020. Very good. Yes. Now ask yourself, Rahul, I have deducted on 21st October. I have deposited on 7th November 23. Have I done it within due date, after due date? Within due date, after due date? Within due date. Therefore, will this expenditure be allowed, not allowed? Allowed as a deduction. In which year? It will be allowed in the previous year 23-24 itself. It will be allowed in the previous year 23-24 itself. Yes or no? Question number 2. I am saying, Rahul, again expenses of 23-24. I deducted it on 1st Jan 24. Hey, within previous year, after previous year? Within previous year. Rahul, I have deducted within previous year. I have deposited it after previous year, but I have done it on 1st August 24. Within the due date, after the due date? Within due date. Allowed, not allowed? Allowed as a deduction. Yes. Case number 3. I have deducted TDS on 5th May 23. Within the previous year, after the previous year? Think again. It is happening within the previous year. Rahul, I have deducted it on 5th May 23, which is within the previous year. I had to deposit the money by the due date. I deposited on 10th December 24. I deposited on 10th December 24 within the due date of return filing, after the due date of return filing. After the due date of return filing. Have I satisfied conditions or violated conditions? I have violated conditions. If I violated conditions, will I disallow or allow? I will disallow in previous year 23, 24. I told you the moment you are disallowing, you can claim it as a deduction only in the year in which you pay the TDS. When have you paid the TDS? You have paid it in previous year 24, 25. So you can claim it in previous year 24, 25. Clear, not clear? Clear? Yes. Case number 4. Case number 4. Rahul, I have deducted the TDS on 9th April 24 and I have deposited on 6th June 24. Have I done the deposit before the due date of return filing? Yes. But have I deducted before the previous year? Can I use the second one and come and say allowed? Can I say that I have deposited by the due date, therefore it is allowed? No, it is not possible. You have to have both the conditions satisfied. Since you have violated scenario number 1 itself, it becomes disallowed in previous year 23, 24. It becomes disallowed in previous year 23, 24. Rahul, since you have disallowed it in previous year 23, 24, you can claim it as reduction in the previous year 24, 25. Why, Rahul? Because it is 6th June 24. So it is previous year 24, 25. Yes or no? Yes or no? Last case. I am deducting the TDS on 26th July 24 and I have deposited the TDS on 14th May 24. 14th May 25. Hey Rahul, have I deducted TDS before the previous year? No. Therefore, it will be disallowed. Rahul, I have disallowed it now. I will check for payment year. I have checked for payment year. In which year will I claim deduction, Rahul? In which year will I claim deduction? You will claim it in 25, 26. A question to you. I deposited on 14th May 25. It looks like it is within the due date of return filing of PY 24, 25. Yes or no? 14th May 25 falls within due date of return filing of PY 24, 25. Can I come and say that Rahul 24, 25 is when I can claim the deduction? Can I come and say that I have deposited in the due date of return filing of next to previous year, so therefore I will claim it in the next to previous year itself? Allowed, not allowed? Not allowed. Please understand, income tax comes and says that the due date of return filing condition is only there for the year in which you incur the expense. If you incur the expense in 23, 24, you have time till 30th November 24. Since you have violated the condition, I will no more look for the due date. I will only look for the actual year. Even though 14th May 25 falls within the due date of PY 24, 25, it doesn't matter. Since you made the payment on 14th May, I will consider it as PY 25, 26. I will not bring you back to 24, 25. Hey, tell me if you understand this. Last one is important. Tell me if you didn't understand. All clear? Think about it carefully, ma. You are in PY 23, 24, correct? For PY 23, 24, what is the due date of return filing? 30 November 24. You are in PY 24, 25. What is the due date of return filing? 30 November 25. Now look at it carefully. In my example, what has happened is I have not deposited the money, I have not deducted the money before the end of the previous year. Okay, I deducted money somewhere in April 24. So is it within the previous year or after the previous year? So should I disallow in 23, 24 or should I allow in 23, 24? So I disallowed this payment. Okay, I disallowed this payment. Now I told you that if I have disallowed this payment, I will get the payment in the year in which I make the TDS payment. I make the TDS payment. Now I have made the payment of TDS on 15th May 2024, 2025. 15th May 2025. If you notice, 15th May 2025 falls within the due date of return filing of 24/25, correct or not?
Yes.
But actually speaking, it is PY 25/26. Question then comes is, can I claim this in PY 24/25 itself, saying that I have paid it before your due date?
No, we cannot take previous year and the assessment year. The respective previous year's assessment year level we should do that.
Exactly. So the provisions are basically coming and saying that if you want to claim the benefit of return filing due date, that is a benefit only for the previous year in which you incur the expense. For me, I incur the expense in PY 23/24, so that alone I was given the time till 30th November 24. The moment you violate that condition, I no more have that benefit itself. I no more have that benefit itself. In the subsequent years, I can only use the actual previous year as a criteria. In the subsequent years, I can only use the actual previous years as a criteria. In my scenario, the actual previous year is only 25/26, and therefore the claim will only be allowed in 25/26. I cannot allow the claim in 24/25 itself. Is that clear now? Is this clear? Yep. Okay. Okay. Yes. Now, there is another problem. There is another problem telling you that Rahul, I have forgot to do TDS. I have forgot to do TDS, because of which I have taken a disallowance. Because of which I have taken a disallowance. Now, income tax is coming and saying, if you want to claim this allowance, you have to deposit the TDS. You have to deposit the TDS. So what happened is, I went back to Mr. B. And I came and told Mr. B, I by mistakenly gave you the whole 1 lakh rupees. I should have actually given you only 90,000. I should have actually given you only 90,000. I'm sorry. I have made a mistake. Can you refund this 10,000 back to me so that I can pay it to government on your behalf? Can you refund the 10,000 back to me so that I can pay it to government on your behalf? Is what the request which has come. B came and said, I'm sorry, Rahul A. I'm sorry, Mr. A. I cannot pay the money back to you. I have already used the money off. At the same time, anyway, I had to go and get it from government back. Instead of that, you itself directly gave it to me. I am not in the mood to give it back to you. I'm sorry. I am sorry. Yes. Mr. A came and said, no, sir, please understand, I have to do this TDS. Varna, the payment which I made to you will become disallowed for me. Mr. B comes and says, I do understand, Mr. A. I am not denying it. I understand your pain. But please understand. There is no point of me giving this money back to you, because tomorrow I am going to file the return. If tomorrow I am going to file the return, I will itself end up paying the tax. Rather than you paying TDS for me, let me itself pay off the tax. You are actually asking for 10,000 from me. Actually, my tax payable is only 5,000 for the year. What is the point of me giving you 10,000 and claiming refund of 5,000 from government? I might as well only pay 5,000. A, does B making sense? Not making sense? Is B making sense? Not making sense? B is making sense. B is coming and saying, instead of me giving you 10,000 and then asking the government to give me back 5,000, let me directly only pay 5,000. So that I don't have to pay single money extra. Not pay single money extra. Unnecessary me giving you 10,000, getting back 5,000. The money will take time to come from government also. So there is no reason for me to do that. I don't think I want to do it, sir. Now B is asking a genuine request, not a general request. B is asking for a genuine request. But the problem is A is stuck. Because A is coming and saying department is not allowing it. Yes or no? A decided to go to income tax department and come and say, dear income tax department, I tried asking B for the money. B is not ready to give me the money, because B says he will itself pay off the tax. At the end of the day, please understand, you wanted tax. You wanted tax. He is ready to pay it on my behalf. He is ready to pay it on my behalf. Why do you want to disturb me? Give me the expense of. Give me the expense of. Don't make this permanent for me. Don't make this permanent for me. This is what A is asking to government. This is what A is asking to government. What will government say? What will government say? Government will say, yes, what you're talking is genuine. What you're talking is genuine. The only thing is, I want a proof that he will make the tax payment. Correct or not? I want a proof that he will make the tax payment. What if you tell me right now, I give you the claim and tomorrow he doesn't make the tax payment? Tomorrow he doesn't make the tax payment. So you get me a proof. You get me a proof. Yes or no? Yes or no? This is what is the next proviso. This is what is the next proviso. The next proviso comes and says that if you have made a default in TDS, if you have made a default in TDS and you're facing issues to get the money back from the other person, if you're facing issues to get back money from the other person, don't worry. Don't worry. I will still give you the claim as long as you can prove it to me that the other person paid the taxes on that income. As long as you can prove it to me that the person paid taxes on that income. Rahul, how will that other person prove? How will that other person prove? What do you think you should collect from him for the proof? What do you think should you collect from him? Think no. Think no. What do you think A should collect from B as a proof? A, where will he pay taxes after he files the return, correct or not? Yes. So I am saying, Mr. B, if you have paid taxes for this, do one thing, give me your return. Give me your return. So proof number 1, I am saying, give me your return. Proof number 2, I am saying, in the return, show me where you have shown the income. Show me where you have shown the income. Proof number 3, I will come and check, sir, on the income kamala, have you paid tax or not paid tax? Have you paid tax or not paid tax? Yes or no? Yes or no? So I am putting 3 conditions to you. Condition number 1, check his return. Condition number 2, check whether the return has a income. Check number 3, check whether the income for which he is disclosed, has he paid taxes. 3 steps to satisfy. If you satisfy these 3 steps, I will give you the deduction. Who is this? Income tax department. So income tax department is coming and saying, if you go to B and get me 3 evidences, Evidence number 1, he has filed a return. Evidence number 2, the return has that income which you spoke about. Evidence number 3, on that return, on that income he has paid taxes. On that income he has paid taxes. You satisfy me 3 conditions, I am okay to give you the deduction. I am okay to give you the deduction, subject to a condition that you get a CA proof. You get a proof from a CA. So get a CA, ask him to check this for me. Ask him to check this for me and ask him to give me a certificate. Ask him to give me a certificate. So department said, ask a CA to give a certificate saying B has satisfied all these 3 conditions. The day when the CA gives me the certificate and the day when the return is filed, I will give you the deduction of. Hey, did you understand the sequence? Did you understand the sequence? Let me know if you have a challenge. Both of you understood the sequence? Yes. Let's read the sequence. Let's see if you understand. Okay. Yes, ma.
Paying to a company.
Okay.
So individual has to file by July.
What is July?
Due date of.
Acha. Okay. Huh.
And suppose company anyway will file, so the individual can get the benefit only in the next year, since company will file the return only by.
Again, I'm going to read it for you, then you'll understand. Okay, let's read it together and then you'll understand probably what I'm talking about. Okay, let's read the theory. The theory says, if a resident or a non-resident furnishes the return of income, takes into account the expenditure of the payer as an income, pays the tax due on such income and furnishes a certificate from a CA, the disallowance under section 40AIA and 40AI will be allowed in the year of furnishing of ROI. Now notice this, Tanya, very carefully. I am telling that the year in which the return is furnished by the company. When will the company furnish the return, ma?
November.
30th November or 31st October. Yes. So which means you will only be able to claim the deduction when? That's all is the answer. So you'll be able to claim the deduction only in PY 24-25. Okay, so it doesn't matter even if it's an individual or a company scenario, because even if it was an individual scenario, you will get the deduction only in PY 24-25. Even if it is a company scenario also, you'll get the deduction only in PY 24-25. You will have to take a disallowance for 23-24. There is no doubt. Okay, because 23-24 you should have done the TDS. You have defaulted a TDS. I will not give you a deduction. You can claim the deduction in 24-25 after you give me the return. Clear? Yeah. So this is what the criteria for 40A is. This is what the criteria for 40A is. 40A in simple words comes and says that if you have to make a payment to a resident or a non-resident, please ensure that you do the TDS on those payments. If you do not do the TDS on those payments before 31st March of the previous year, or after you deducted the TDS but you did not make the payment of TDS by the 30th November or 31st October, as the case may be, in that case whatever payments you proposed to make will be disallowed. 30% will be disallowed if the payment is happening to a resident, and 100% will be disallowed if the payment is happening to a non-resident. When will you get the deduction, Rahul? The deduction will be given in the year in which the TDS is paid to the government. But in case you don't make the payment of TDS to government also, I will give you the deduction as long as you can prove it to me that the other person has filed a return of income, has included this income, has paid taxes on this income, and has given me a CA certificate. In that case also you can claim this as a deduction in the previous year in which you have made the filing of return. Yes or no? Yes. Look at the last note. This is more of a case law, so I'm going to answer it to you. The case law is like this. What happened is, I had a person. Okay, I was Mr. A. Okay, this is Mr. A was planning to make a payment to Microsoft. For buying a Microsoft license. For buying what? A Microsoft license. So Mr. A decided to make a payment to Microsoft. Now Microsoft is sitting in US. So Mr. A planned to make a royalty payment to Microsoft. Let's say a payment, let's not say royalty payment, let's say a payment. Okay, so what happened is he decided to make a payment to Microsoft. Okay, now the payment was $1,000. Okay, so Mr. A, what he did is he made the payment to Miss Microsoft US with $1,000 without deducting any TDS. What happened is, assessing officer came to A and said, you made a payment to Microsoft for $1,000, you have not deducted TDS. Therefore you are a defaulter. I want to disallow this payment. Mr. A came and said, dear sir, the reason why I did not deduct TDS is because this payment is not liable for TDS. I am very sure that his payment is not liable to TDS, so therefore I did not deduct TDS. Assessing officer says, no, pa, this payment is actually liable for TDS. Or it could have been liable for TDS. You should have come and checked with me. You did not come and check with me. Therefore, I am not happy. Since you did not come and check with me and you made the payment without doing TDS, I will disallow this payment. Mr. A comes and says, sir, why should I come and check with you? Do you think I have only this job in life? Microsoft is not the only person I'm making a payment. I'm making payment to 1,000 parties. Do you think for every single party, when I make a payment, will I come and check with you whether it is to be deducted or not to be deducted? No. So I said, sir, from my understanding, it was not liable for TDS, so I did not do TDS. There is no reason for you to disallow this payment. Assessing officer says, no, pa, I think you should have come and approached me. Since you did not approach me, I will disallow this payment. Who is right? Assessee, assessing officer? Who is right? Is it mandatory for me to every time go and approach the assessing officer, check whether the payment is liable for TDS or not liable for TDS, and then only make a TDS payments? Or is it okay that I can make my own decisions? Tell me, what do you think? Gayatri?
it's paid only from its liability. So
Oh.
that so
Okay.
genuinely feels the other thing is it's not actually liability.
So assessee is right then. Okay, Britania.
It's not required to direct tax, then it's not liable to direct, so we will.
No, so I am saying I am not liable to deduct. Assessing officer says I don't know. You may be liable, you may not be liable, but you did not come and check with me, so therefore I am disallowing this. Is the contention valid? Not valid?
But doctor has to come to the station. He will know that it's at least when he's making the contention and it's right. It is liable or not liable.
I know, I am not denying it. See, if the payment was actually liable for TDS, then ideally speaking, he would have disallowed it. Okay, then there is no doubt at all. Okay, because the payment was liable for TDS, you have not done it, that is disallowable. The point is, assessing officer is not debating about the fact that it is TDS deductible or not. The assessing officer is debating the fact that why did you not come and check with me? You should have come and checked with me whether it is liable for TDS or not liable for TDS. Okay, the reason I am telling you this, Ritanya, is basically when you go to section 195 of TDS chapter. Okay, section 195 of TDS chapter comes and says if an assessee feels that he is not liable for TDS, if an assessee feels that he is not liable for TDS, he can make an application to the officer and tell him that he is not liable for TDS. Unless and otherwise that happens, sometimes payments may be liable for tax. Sometimes payment may be liable for tax. If you feel like you are not liable, you should get an application done. Okay, so assessing officer is saying you did not make an application and therefore I am not happy. I am saying, sir, for every single thing I cannot make an application to you. You have to understand that this is a practical scenario. Where I feel it is not liable, it is not liable. I don't have to agree single time if I come and have to ask you, if I have to come to you and ask you for an application, I may have to file 50,000 applications to you every single year. Do you think that makes sense? Yeah. My question is very simple. Can assessing officer use non-filing of application as a criteria for disallowing the payment? Huh? No, no, obviously no. Yes, understand, a person working in a practical world has his own decisions to make, He can make his wise judgment about the fact that a payment is liable for TDS or not liable for TDS. Yes, no one has to come and monitor him or mentor him for that. If the person has done his own research and basis that research he has come and concluded that he is not liable for TDS, there is no obligation on him to go and ask the department. So he does not have to mandatorily go and ask the department for all these things. Okay. If at all the payment was actually liable for TDS and you have not done the TDS, you are in the powers to disallow it. But for the simple reason that I did not make an application to you, you cannot hold a grudge against me and ask me to disallow the payment. That is not how it works. And therefore the courts came and decided that merely because an application was not filed, an assessee cannot be penalized with a disallowance. In the future, if you actually find out that the payment is not liable for TDS, then it's just a waste of time and efforts. Clear? Yeah. Okay. This was scenario number 1. Coming to scenario number 2. Now this is more of a technical thing, so I just wanted to keep you in mind. When you read 40A, you read the section. No, the section comes and says when an assessee is required to make any payment, which is payable under the income tax law. When an assessee incurs any expenditure for which TDS is payable under income tax law, the payment shall be liable for TDS. The payment shall be liable for disallowance in case the TDS is not adhered to. Okay, something like that will be given. Now, what has happened is the heading in the section comes and uses the word payable. It comes and says where an expenditure is payable by the assessee on which TDS is mandatory, but the TDS has not been adhered to, then the expenditure is disallowed. The words used is payable. Now, do you know the meaning of payable? It means it has already happened or it is going to happen. It is going to happen. So what happened is there was an assessee, smart person. What he did is he incurred an expense on 6th July 2023. He incurred an expense on 6th July 2023 and he made the payment for this expense on 31st July 2023 without any TDS. Without any TDS. Assessing officer went ahead and disallowed this payment. Came and said that, dear assessee, you did not deduct TDS, therefore it is disallowed. Assessee came and said, sir, you cannot disallow the payment. Assessee said, you cannot disallow the payment, sir, because in the act the word used is payable. I have actually ended up paying the money before the end of the year itself. Which means I have not done anything which is payable. I have done anything which is paid. I have not done anything which is in the nature of payable, which means, sir, this section will only apply to those kind of expenditures which are payable as on 31st March. My expense is not payable as on 31st March, sir. I have already made the payment in the month of July. So even though I have made the payment without TDS, you have to allow me the expense. It is your mistake that you have poorly drafted the law. For me, I want the deduction. This has come to you before as a judge. Will you allow the deduction, not allow the deduction? This has come before you as a case. Will you allow the deduction, not allow the deduction? Mm-hmm.
But he has ultimately paid itself. He has been over. He has been.
Understand, assessee has not paid the TDS. Assessee has paid the expense of. Motta payment kuttitaru without TDS. Assessee has violated the law. He has not done TDS because the government is asking for it. But assessee came and said, I don't care. I don't want to pay the money because you have used the word payable. I have used the word paid. That's all. Okay, so I have not come into the section itself. Is assessee right? Not right? Yeah. Income tax came and said, boss, these are very, very minor and minute issues. Don't try to take advantage of these minor differences. Just because I've used the word payable in the law does not mean that paid is not covered. They both are equally important. While yes, the word used is payable, no one at any point of time has come and told payable means as on 31st March. Yes, the moment you incurred the expense on 6th July, it was payable to you, and therefore that is still valid. Even if you have ended up paying the money within the due date of, paying the money before the end of the previous year, the disallowance will still be triggered. Therefore, the assessee is not right. The assessing officer is correct. So the case law comes and says that it doesn't matter even if the payment has happened before the end of the previous year. Since you did not do the TDS, it will still be disallowed. For the purpose of this section, paid also includes payables and payables also includes paid. Both are the same thing. Clear? Yes. Let's read. It says, the words paid includes payable. Accordingly, disallowance under section 40AI and 40AI shall be triggered on both sums payable at the end of the previous year or paid during the previous year. It doesn't matter. Both are disallowed. The case law was Palam Gas Services. Is a Supreme Court decision. Okay. Next case law comes and says, where the payment made to a non-resident is not chargeable to tax in India, section 40ai cannot be invoked on the ground that no application under section 195(2) was made. Okay, just because I did not make an application to you does not mean that you can come and disallow a payment for me. You come and you verify whether the payment is TDS deductible or not. Then you come and ask me. Unnecessarily don't come and disallow every single thing. Unnecessarily don't come and disallow every single thing. That is not how it works. That is not how it works. Yes or no? Yes or no? Yes. Yes. All right. Let's look at some questions. Let's look at some questions. Tell me what is the answers. Okay. Yes. We are looking at the questions. It says ISAC Limited is a company engaged in the business of biotechnology. Is a company engaged in the business of biotechnology. The net profit for the year ended 31st March 24 is given to you as 35 lakh 25 lakh 890. 35 lakh 25,890 after debiting the following items. After debiting the following items. Please be extremely careful. Please be extremely careful. I am telling that these expenses are after debiting, which means the 35 lakhs is after claiming these expenses or before claiming these expenses? It is after claiming this expenses. Yes, keep this in mind, which means we might have to disallow something. Notice it says purchase price of raw materials which is used for the purpose of in-house research and development, including a GST of 1,80,000, which is not ITC claimable. A section number. In-house research and development, section number 35. Section number 35, scientific research. Provisions come and say that if you have a capital expense or a revenue expense, both are allowed as a deduction. Rahul, how much can I claim as a deduction? Can I claim the full 11,80,000 or should I claim only 10 lakhs, ignoring the ITC?
Because ITC is not
very good.
credit is not.
Correct. If you're not eligible for the credit, that means that is also a cost to you. So 11,80,000 fully allowed as a reduction. Section 35 says 100% is allowed as a reduction. So therefore, do you have to do any adjustment? No, because it is already debited. So no problem. Can we go forward? Yes. Next, purchase price of an asset used for in-house research and development. Now understand, the question is coming and saying that the 35 lakhs is after considering the following items, which means even though this is an asset, it is appearing that it is already there in the P&L. If this expense is already there in the P&L, you will have to disallow. Don't come and make an assumption that it is an asset, so you would have not done in the P&L. This is ICI. Okay, so if ICI is coming and saying that it is debited, then it means it is debited. Look at it. It says purchase price of assets used for in-house research and development. Which section, ma? Section same 35. Section same 35. Provisions come and say if you are incurring any capital expenditure for scientific research, you are allowed for the deduction of the whole of the capital expenditure except for land, which means they are saying purchase price of an asset used for in-house research and development. You have incurred land cost, you have incurred building cost. Which one can you claim? You can claim building cost. Building cost is already debited, not debited. Allowed, not allowed. To do any adjustment, not do any adjustment. Not required. Land, is it there in the P&L? Not there in the P&L. It's there in the P&L. Can you claim in the P&L? No, therefore you will disallow. Yes or no? Next. Expenditure incurred on notified agriculture extension project. Parchir komo padi liya? Have you read this? Yes, we have learned it in 35 CCC. I said you that any kind of expenditure which you have incurred for agriculture extension, you are allowed 100% of the expense. Is the expense already there? Yes. Do you have to make any adjustment? No adjustment. Hey, clearer. Any doubts? Can we go forward? Is there any challenge? No. Okay. Next one, expenditure incurred on notified skill development project. Expenditure incurred on notified skill development project. You have incurred expenditure on land 40 lakhs and on training 32 lakh 50,000. Can you claim the land expense? No. Is it there in the P&L already? Yes. Therefore, you will disallow. Therefore, you will disallow. Then expenditure incurred for training for skill development. Allowed, not allowed? Obviously allowed. Allowed as a deduction. 100% expense allowed as a deduction. Next, expenditure incurred on advertisement in the souvenir published by political parties. 75,000. Hey, where have we learned this?
37.
Very good. 37. Allowed, not allowed? Not allowed. Amount is 75,000. Amount is 75,000. Next, expenditure incurred on issue of right shares. 80,000. 80,000. Ask yourself, is it increasing capital base, not increasing capital base? Allowed, not allowed? Not allowed. Very good. 80,000. Then expenditure incurred on issue of debentures. 50,000. Increasing capital base, not increasing capital base? It is not increasing your capital base. Increasing capital base are only IPO, FPO and right shares. Not increasing capital base, therefore allowed as a deduction. Next. Penalty paid under GST Act 35,000. Allowed, not allowed? Not allowed. Offense of a law. Offense of a law. Next, penalty paid for breach of a contract with customer. Allowed as a deduction. Allowed as a deduction. Next, interest paid on loan taken from a bank for payment of advance income tax. Interest on loan taken for payment of advance tax. Allowed, not allowed? Allowed. Why allowed?
It is for the business.
General business purpose. You have taken a loan, no problem. All allowed. Then provision for loss of subsidiary 85,000. Not allowed. Why?
Provisions are also generally known.
Very good. Provisions are not allowed under section 36. These are notional items. Therefore, it is not allowed as a deduction. I have the numbers now. I started with 35 lakhs. Add all the numbers. How much is my total disallowance? 45 lakhs. $46 lakh 15, 46 lakh 20, 46 50, 47 35 nanogram. Yeah, total the disallowances. What is the number? I think it is 47 lakh 35, 48 lakh 35,000. So you will disallow 48 lakh 35,000, add to that 35 lakh 25,890. Your answer will come as 83 lakh 60,890. You'll get it as 83 lakh 60,890. Yes. Next.
So this issue of rights shares and debentures, this is coming under which section?
37 ma. We showed it, no? Did you see it? We discussed, no? It's here.
Yeah. It's not given explicitly in 37.
No, it is a case law. Case law comes and says that when you are going to incur any kind of expenses relating to debentures and all, those are not increasing a capital base, so it is not a capital expenditure. But when you are incurring IPO, FPO, right shares, they are actually increasing a capital base, so it is a capital expenditure. So 37 says no, that you should not be a capital in nature. Ange disallowed. Yep.
Sir, I have one basic.
Yes.
This generally we were telling in income tax all revenue expenditure is allowed.
Correct.
Capital only specifically allowed.
Capital is never allowed.
Until it is specifically stated.
That is income, that is not expense. We told that any revenue receipts are taxable. Capital receipts may not be taxable unless and until it is given under 224. That's not for the expense part. Expense part, I said expense part, revenue generally you have to check for conditions. Capital also you have to check for conditions.
Okay, the income part is coming from 224.
Exactly. It is coming from 224. If you read 224 properly, Ritanya, what will happen is 224 will come and say income includes. Okay, and then it will come and say any profits and gains arising from business or profession, which means any revenue receipts are covered there. and then after that every single item after 224 is all capital receipts. So technically what is happening, the understanding is if it is a revenue receipt, it is covered under profits and gains of business or profession, but if it's a capital receipt, then you have to specifically notify it. Yeah, right. Look at the question. It says Delta Limited is credited the following items to the account of residents payee in the month of March 2024 without deduction of tax at source. What would be the consequences of the non-deduction of tax at the source by Delta Limited on these amounts during the financial year 23-24, assuming that the resident payees in all these cases mentioned above have not paid the tax on, if any, which is required under the Delta Limited by which has not been deducted by Delta Limited. So they are saying there is a person called Delta Limited who has credited the following amounts to the persons and they have not paid taxes on those. They have not paid taxes on those. The other person is not the other person has also not paid tax on those. You are required to take the examine implications. You are required to examine the implications. It says first payment is salary paid to employees. Salary paid to employees credited and paid in March 2024, 12 lakhs. Hey, should you have deducted, not deducted TDS? Should you have deducted TDS or not deducted TDS? Obviously, it's a payment made to resident, you should have deducted TDS. Therefore, allowed, not allowed? Not allowed. How much should you not allow, Rahul? 30% you should not allow. 12 lakhs into 30% will give you 3,60,000. So, amount to be disallowed is 3,60,000. Amount to disallow is 3,60,000. Yes or no? Yes or no? Scenario number 2. I am saying I have paid a director remuneration credited in March and paid in April 24. 28,000. 28,000. A. Should you have deducted TDS? Not deducted TDS? You should have deducted TDS. 194J. 194J. Therefore, this will also be disallowed. 28,000 into 30% will give me how much? 8,400. So both the payments are getting disallowed. Both the payments are getting disallowed. Question is saying, would your answer change if Delta Limited had deducted taxes on director's remuneration in April 24 at the time of payment and remitted the same in July 2024? Would your answer change? Would your answer change? No, it will not change. The reason is because the credit happened in March 24, so therefore the payment has been booked in March 24. The payment has been booked in March 24. If you had credited on April 24 also, you have not deducted the TDS before the end of the previous year, so therefore anyway it would have been disallowed. Therefore anyway it would have been disallowed, and therefore you cannot claim the deduction. You cannot claim the deduction. So even though you have deducted the TDS in April 24, it is after the due date of after the end of the previous year, and so it will still be a violation of condition. Since you have disallowed it earlier, you will continue to disallow it right now. Would your answer change? Answer will not change. Answer will not change. Look at the question. Tell me if you understand. Can we go forward? Can we go forward? Yes. Yes. Okay. Question number 16. See, from this question, there are some TDS provisions which are going to come into picture. So I will tell you the TDS provisions and I will tell you whether TDS is applicable or not. Keeping that in mind, you tell me whether TDS will happen or not, disallowance will happen or not. Okay. The provisions are saying during the financial year 23-24, the following payments and expenditures were incurred by Mr. Yuvan Raja, a resident individual who's having a turnover of 99 lakhs. Who's having a turnover of 99 lakhs. Now TDS chapter comes and says that if at all you want to do TDS, if you want to do TDS on hijacker cases, H-I-J-A-C and R, hijacker cases, your turnover should exceed 1 crore. Your turnover should exceed 1 crore. So which means if it is a payment covered under hijacker, TDS will not come because the turnover is less than 1 crore. But if it's a payment other than hijacker, you still have to do TDS. You still have to do TDS. Keeping that in mind, let's see. Keeping that in mind, let's see. The first payment is saying interest of 45,000 which is paid to Rahman and Co, a resident partnership firm, without deduction of tax at source. Without deduction of tax at source. Now, interest payments are covered under 194A, which is a part of hijacker, which means you are not obligated to deduct TDS. You are not obligated to deduct TDS. If you were not obligated to deduct TDS, are you liable for disallowance? Not liable for disallowance. Are you liable for disallowance? Not liable for disallowance. You're not liable for disallowance. So therefore answer is nil. Answer is nil. Next, 10 lakhs was paid as salary to resident individual without deduction of tax at source. Now salaries are covered under 192 and those do not have a criteria of hijacker, therefore TDS is mandatory. TDS is mandatory. Have you done TDS? No. Disallowance will come, not come. It will come. How much will it come, Rahul? The payment is happening to resident individuals, therefore it will be 30%. So therefore 3 lakhs will be disallowed. Therefore 3 lakhs will be disallowed. Yes, yes. Next, Rahul, commission of 16,000 was paid to Mr. Vidyasagar without deduction of tax at source. Commission is forming part of 194H. H forms part of hijacker and therefore TDS was not mandatory. TDS was not mandatory. Since TDS is not mandatory, disallowance is also not liable. Disallowance is also not liable. You will understand these questions better when you complete TDS chapter. When you complete TDS chapter, right now it is okay if you don't understand. It is okay if you don't understand. Can we go forward? Yes. Yes. No. Okay. I'll teach you to in TDS chapter. Hijacker is basically 194H, 194I, 194J, 194A, 194C and 194R. Okay, we will discuss when you do TDS chapter. I'll give you all abbreviations for you to remember, because TDS obviously it's a little complicated chapter. So I prepare some summaries and everything for everyone. When I prepare summaries, these are the kind of summaries I'll give you so that you understand the chapter better. Alright, so it is hijacker. So H is commission, I is interest, J is professional, H is commission, I is rent. H is commission, I is rent, J is professional, A is interest, C is contract, R is benefits and perquisites. Okay, so if you make payments of these kind of natures, you are not liable for TDS. That's how the idea is. Okay. Yeah. Moving back to our next disallowance. Moving on to our next disallowance. The next disallowance is relating to equalization levy. I'm going to hold this discussion. We will discuss this in a chapter called as equalization levy. Okay, in your book there is a chapter called as equalization levy, so we will discuss it in that chapter. Right now not relevant. Right now not relevant. You can ignore it. You can ignore it. Next. Taxes paid under Income Tax Act. Taxes paid under Income Tax Act. In a simple nutshell, if I have to close this section, the section comes and says, whenever you have any kind of payment which you are planning to make under income tax, whenever you have any kind of payment which you are planning to make under Income Tax Act relating to your income, you will be taking a disallowance for those. Any kind of payments made under Income Tax Act for your own income is not allowed as a deduction. When I say any payments, I am talking about tax, surcharge, cess, interest, penalty. Surcharge, cess, tax, interest and penalty. So if you end up making any such payments under Income Tax Act for your own income, it will be disallowed. That is why when we did section 37, I came and told you any interest paid under Income Tax Act is generally allowable under 37, but is disallowed under 48(2). So the provisions of 48(2) come and say that if at all you are liable for any kind of payment under Income Tax Act in the nature of tax, surcharge, cess, interest, penalty, those items will be disallowed permanently. You cannot claim a deduction for those. At the same time, please understand this is only for Income Tax Act, which means if you make these payments under any other act, it is allowed as a deduction except for penalty, because penalty is an offense payment. So anything other than Income Tax Act payments are allowed as a deduction except for penalty. Yes or no? Yes. Next. The question which then came up is, Rahul, what is happening is you are going to make a payment of TDS. You were supposed to make the payment of TDS on 7th of next month. What is next month? November, for example. You have to make the payment on 7th of November, but you forgot to make the payment on 7th of November. And therefore income tax levied an interest at the rate of 1.5% on your payments. 1.5% of your payments. You are liable to pay an interest of 10,000 right now. How much? 10. 1000. Now, question to you. You have to pay interest on TDS. You have to pay interest on TDS. Is this payment allowed, not allowed? Interest on TDS, allowed, not allowed? Allowed, not allowed? Understand, income tax came and said that, sir, I am talking about taxes on your incomes. I'm talking about taxes on your incomes. Since TDS is not a tax on your incomes, it could have been allowed. It could have been allowed in the market. In the market, there are various decisions which come and say interest on TDS is allowed. And there are equally enormous decisions which come and say interest on TDS is not allowed. It is not because of section 40A2. It is not because of section 40A2, it is because of section 37. It is because of section 37. Some courts come and say interest on TDS is allowed as a deduction because first of all, it is not your income. It is someone else's income, it is your expense. Second of all, it is not a payment happening for your tax. It is not a payment happening for your tax, it is a payment happening for someone else's tax. So therefore, it is allowed as a deduction. It is equivalent to your interest on GST. It is equivalent to your interest on GST. The other courts come and say, I do agree to all those things, but understand, if I allow interest on TDS to you, then you are promoting people to do defaults. You are promoting people to do defaults under your own act, and so some courts come and say it is not allowed as a deduction. It is not allowed as a deduction. Rahul, from ICA perspective, it has been treated as disallowed. It has been treated as disallowed. ICI comes and says you have to disallow any kind of interest on TDS. Interest on TDS. It is again not given in the study material. It is coming from the past exam papers. So past exam papers have come and clarified that any interest on TDS will be disallowed, even though there are court decisions which may say it is allowed. Even though there are court decisions which may say it is allowed, understand it is not forming part of 40A2 because it is not your income. It is not your income. It is not a payment happening on your income. It is a payment happening on your expenses. Has nothing to do with your income. Has nothing to do with your income. So for the sake of reference, in my book also I have mentioned interest on delay in deduction or remittance of TDS will be disallowed under 40A2 only for exam purposes. Only for exam purposes. Keep this in mind. Keep this in mind. Yes or no? Yes, is it clear? Can we go forward? Go forward. Yes. Yes. Okay. Like I told, late filing fee paid under income tax is not covered, hence allowable under 37 as it is compensatory in nature. But please understand, there is only one decision there is only one exam of ICA where they have come and said late filing fee paid for income tax returns is disallowed. So I have put it there. I have put it there. Yes. Yes. Next items. Next items. I am coming and saying any royalty fee or charges paid by state government undertaking. I am saying if you are making any kind of payment of royalty, license fee, service fee or privilege fee or service charge or any other amount which is apportioned from a state government undertaking by state government, it's apportioned by a state government undertaking through a state government, will not be allowed as a deduction to the state government undertaking, will not be allowed as a deduction to the state government undertaking. Understand, this is a very specific decision. This is a very specific decision which is only between state government undertaking and state government. It is only between state government undertaking and state government. This will not come for exam. This will not come for exam. You are never tested in exam about governmental organizations. Okay. So you are never tested in exam about governmental organizations. So unless and until that happens, you will never have this thing coming in your books. You will never have these things coming in your books. You can ignore it and go. You can ignore it and go. Yes or no? Yes or no? Yes. Moving forward, the next item is 48.3. The next item is 48.3. Now 48.3 is a copy paste of 40AI. Is a copy paste of 40AI which comes and says that if at all you are liable to pay any salaries outside India, if you are liable to pay any salaries outside India to a non-resident, on those also you are required to deduct TDS. If you don't deduct the TDS will not be, and the expenditure will not be allowed as a deduction 100%. Rahul, why did they have to give you two different sections? Understand, 40AI does not cover salary. 40AI does not cover salary. It says interest, royalty, dividends, FTS or any other sum. They did not explicitly cover salaries, and therefore they brought in a separate clause. In the separate clause they come and say any salaries payable outside India to a non-resident will be disallowed if the salary does not have a TDS deduction. If you do not do it, you have to disallow it. You have to disallow it. Yes or no? Yes or no? Yes, yes, yes. Can we go forward? Can we go forward? Last disallowance for today. We are discussing about 40A5. We are discussing about 40A5. Now, Rahul, this 40A5 is linked to your salaries chapter, so it may not come for exam, but yes, for you to understand, the scenario is like this. The scenario is like this. What has happened is, I am Rahul, working in a company. In that company, they have given me something called as RFA. Does someone know the full form? Does someone know the full form? It is called as rent-free accommodation. So what has happened is, I have been given a free house from the company to stay. Now, as per the salary provisions, this RFA is taxable, assuming the taxable perquisite is 1 lakh. So what happened is, I have been given an RFA from the company, and the company is going to levy income of 1 lakh as a perquisite. Hypothetically, assuming my tax rate is 30%, my tax will become 30,000. Now, what happened is, company went to the employee and came and said, dear employee, I have given you a free house for 1 lakh worth, and therefore I have to levy a tax of 30,000 to you. I will collect it from your salary. Employee came and said, dear employer, I am very grateful of the fact that you have given me a house. But please to understand, I have not got a single rupee in my hand. Had you given me some rupees in my hand, I would have given you back 30% of it. To pay as taxes. Today, the only thing which you gave me is the house. You did not even give me a single rupee. So therefore, I don't have a single rupee money in my hand to pay you the tax. Please understand, this is the non-monetary perquisite on which, if you're asking me taxes, I don't know where to pay this money from. A sensible question, non-sensible question? Sensible, non-sensible? Sensible question. So what happened is, employee went to the employer and came and said, dear employer, you are asking me for a tax on something for which I have not even received a single rupee. I don't have the money to give it to you. I'm sorry, I cannot agree to this. Employer came and said, no, Rahul, you have to pay me the TDS. Otherwise it will become a problem. You will cheat government. The employee came and said, sir, if that is the case, let's do one thing. Let's stop RFA. I don't want RFA anymore. This RFA is only causing me a problem. I am not happy with getting perquisites. You forget perquisites. Now you start paying me full salary. Imagine, no, if this happens in the market, do you think anyone will be able to get perquisites? No. The only thing which company will be doing is paying cash salary. Yes or no? Yes. So what happened is, people came and said, no, something is wrong. We need to sort it out. So what happened is, company decided that in order to continue giving you perquisites, I will help you. What I will do is, your tax I will pay. Who will pay? Employer said, I will pay the employee's tax. So he came and said, I will give you the RFA. And whatever is the tax coming on this RFA, I will sponsor you. Who said this? Employer said this. Yes. Employee became happy. He said, yes sir, great, good job. I got the house also. I am not paying a single extra tax also. You sponsor my tax. I don't want to bother. Next day, you are sitting at home. Suddenly one person came and knocked your door. He was the Mr. Assessing Officer. He gave you a paper. Said, dear employee, thank you for your continued service. here is a paper for you. Here is a paper for you. The paper comes and says demand 9,000. The paper comes and says demand 9,000. Pay immediately. Pay immediately. Yes. The employee was shocked. The employee was shocked. Employee was like, sir, I have paid all my taxes and all properly. I have never had a default. I have never had a default. What is this 9,000, sir? I don't understand. What is this 9,000? I don't understand. Assessing officer came and said, dear assessee, you got a house for 1 lakh for which tax was 30,000. For which tax was 30,000. I said, yes, sir. 30,000 was the tax. My employer has paid it. My employer has paid it. So therefore, you got the money, no, sir. He said, yes, pa, no problem, no problem. Employer has paid it on your behalf. So I have got the 30,000. I've got the 30,000. But the problem, no, Rahul, is that this 30,000 was paid by employer. It was not paid by you, which means employer gave you a benefit of extra 30,000. Employer gave you a benefit of extra 30,000. So this 30,000 is also your perk. This 30,000 was also your perk. This 30,000 is also taxable in your hands. It is also taxable in your hands. So 30,000 ka 30%, I am asking you, pay me 9,000 tax. Pay me 9,000 tax. Is assessing officer right? Not right? Tell me, no, quickly. Is assessing officer right? Not right? He is right. Yes. Now employee shocked. Employee shocked. He immediately calls his employer. And he comes and says, dear employer, this assessing officer is standing before me and asking me for extra 9,000, sir. For extra 9,000. You promised me that you will sponsor my tax. So please take care of this. Employer comes and calls assessing officer and comes and says, please don't disturb my employee. I will pay you that extra 9,000. Assessing officer said, yes, sir, good job, and he left. He collected the 9,000 and went off. Next day he came back. Next time he brought a new paper. Can you guess what is there in that paper?
Again on the 9,000.
Very good. The next day he brings another paper. He comes and says the demand is 2,700. Now employee is like, sir, what the hell is this? Yesterday you came and asked me for one number, that also I paid off, sir. What is the problem? He's like, no, pa, you did not pay the money. Who paid the money? Employer paid the money, which means again this is a perquisite for you. On this again I want 30%. Again employer paid this money. Next time again what happened? This 2,700 again another 30% came to you. Now imagine, one payment of 1 lakh rupees. You ended up paying 30,000 munadi. Then you're paying 9,000 now. Then you're paying 2,700. You keep going forward. It will so happen that 1 lakh will become your tax itself. And still it will not stop. Do you think it makes sense? Do you think this makes sense? Can we keep asking tax on tax? Hello? Do you think it makes sense? No, it doesn't make sense. And therefore, we all went and we requested the department that, sir, you have to find out an answer. We cannot keep doing this. Because then forever we'll keep paying taxes only to you. Find a solution, sir. Income tax department said, don't worry, you are my assessees. Let me find a solution. The solution was, they came and said, this 30,000 rupees, no, the whole process started because this 30,000 rupees was treated as a perquisite in the hands of employees. Salary chapter came and said, this will become exempt from tax. So what they did is, in salary chapter they introduced a proviso where they came and said that if at all any taxes are paid on a non-monetary perquisite, by the employer, it will become exempt in the hands of employees. Now tell me, 30,000 ka 30% varoma varada? Will the 30,000 have a tax of 30%? Will it have the tax of 30%? No, it will not have a tax of 30%. Now, I went to the department and I came and said, sir, find me a solution. Department being so nice that they gave me the whole exemption. Do you think department is being nice to me, not nice to me? Okay, I was asking only for a solution, but department coming and giving me a whole exemption on 30,000 is a big loss for the department. Yes or no? Yes or no? Because he lost money on 9,000, 2,700, various other items also. Do you think department will do it that easily for me? Do you think department will do it that easily for me? No, obviously no. What happened is department came and said that if I am going to exempt this in the hands of employee, if I'm going to exempt in the hands of employee, the only way I will do it as exempt in the hands of employee if this is disallowed in the hands of employer. Okay, so the section change was not just happened in salaries, a section change also happened in Pgbp. Pgbp now comes and says any non-monetary perquisites which are treated as exempt in the hands of employees now become taxable in the hands of employer, and that too permanently, because it is a permanent exemption. It is a permanent exemption. It will become a permanent disallowance for employer also. It will become a permanent disallowance for employer also. Now think about it. Employee would have got this taxability only on a slab rate model. Only on a slab rate model. Employer is disallowing it. He will end up paying taxes of 25%, 30% and all those numbers. Does it make more sense for you to tax it in the hands of employees or more sense on taxing in the hands of employer? Does it make more sense to tax it in the hands of employee or employer? In the hands of employee, it makes more sense. It makes more sense in the hands of employee, and therefore this is not a very famous thing which happens in the market. This is not a very famous thing which happens in the market. In market, generally what will happen is companies will go to their employees and come and say, dear employees, please understand, if you do not pay the tax on your pocket, if you do not end up paying taxes on your pocket, you will end up asking me to pay multiple taxes, or you will end up asking me to take a big disallowance. So my honest request, please pay taxes from your own pocket. Please pay taxes from your own pocket. I will take it away from your basic salary. I will take it away from your basic salary. If you still have a problem and you don't want it, let's negotiate and let's make an allowance model. Let's make an allowance model. But if at all you are doing a non-monetary perquisite, I would not recommend you to have a tax paid from my side. I will not recommend you to have a tax paid from my side because I am incurring a huge disallowance because of this. So you please pay it from your own pocket. You please pay it from your own pocket. This is what is happening in the market right now. Market not very famous, not very famous. But since it is there in the law, let me tell it to you. The law comes and says any tax paid by the employer on perquisites, any tax paid by the employer on perquisites on behalf of the employee shall be disallowed in the hands of the employer, shall be disallowed in the hands of the employer because the exemption is coming for an employee. The exemption is coming for an employee. Clear, not clear? Clear, both of you?
So, but anyway, so the employer that direct contribution.
Sorry, ma, come again.
Since it is a perquisite, it has to be deducted by employer.
It does have to. That's what the idea is. No, that's what, Ritanya, what problem happened is when I gave you a perquisite, I also deducted TDS from your basic salary. Correct? And employees started questioning that. Employees started telling that, sir, you never paid me this money in my hand. And you're deducting this money over and above my basic salary itself. Which means technically my basic salaries keep coming down. Okay? What I was supposed to get in my hand, that also has reduced down because you are taking taxes on items which I never even got. So employees started making a question and fuss about it. Therefore, employers started pitching in and started telling, we will pay the extra tax on that also. Purida ungalku. Make sense? Or do you? Does it make sense or you still have a doubt?
But I once again
Think about it carefully, ma. The point is very simple. See, understand, if this is your pay slip, in your pay slip, what will you get? You'll get your basic salary, you'll get your HRA. That's all, correct? If you remember the salary slip and the CTC and take home pay. Yes, what you get in your hand is only going to be basic salary and HRA. Will you get the RFA in your hand? No. So what is happening is you have an RFA right now. RFA is showing 1 lakh. Okay. Now this RFA 1 lakh is 30,000 rupees. Yes. Now this 30,000 rupees, if you are telling me that employee has to pay, what will happen? They will come and say basic salary is 1 lakh, HRA is 1 lakh, less TDS on RFA, how much? 30,000.
Yes or no? Technically, if you think about it, the TDS has been paid from my basic salary. Logically, yes or no? Yes. Do you think employee will be happy with the 30,000 deduction? No. Employee will come and say, understand, in my pocket I got only 2 lakhs. So which means if you ask me tax on this 2 lakhs, I am ready to pay. Because I got 2 lakhs, I know 30% will go out of my pocket. So therefore, I will always assume that 1,40,000 is what I am going to get. Yes or no? So employee is okay to that extent. But employee will feel worried saying that, sir, I got in my hand 2 lakhs. But you have deducted tax of 90,000. Percentage match agli hai, par. Yes, 90,000 divided by 2 lakhs is a big percentage, small percentage. Do you think employee will understand all this? If you come and tell him that no, I have paid you 2 lakh rupees, but I'm deducting 90,000 rupees, do you think employee will be happy? Most of the employees don't even understand income tax. They will come and say, sir, percentage itself is not matching. It should have been only 30%. Yes or no?
Yes.
Yes. That is why what happened is employers started using this mechanism where they came and said, this 30,000 will not even be included in the slip. I will pay it from my side. So when I pay to the government itself, I will pay 1 lakh plus 30,000. Okay, so government, I will pay the 30,000 rupees on your behalf. So that what happens in my salary slip, only 60,000 is showing, which means I will come and say, sir, 60,000 is what I've removed from you because that is what the tax is. That is what the tax is. Will employee now be happy, not be happy? Yes, that is what the idea is. Yes, because of which now what is happening is the moment this 30,000 is paid by the employer is taking a permanent disallowance on this. And therefore, employer came and said, I don't want a permanent disallowance. So now they are going and requesting the employee that, sir, I will retain this 30,000 for you. I will retain the 30,000 for you. I will explain it to you. I will explain it to you that I am deducting 90,000 from you. The reason for which I am deducting 90,000 also I will explain to you. Okay, I'll explain the whole 90,000 deduction to you, and I'll come and say, if you do not do this 90,000 deduction right now, 30,000 will become a permanent disallowance in the hands of employer. Will become a permanent disallowance in the hands of employer. I cannot permit that. I cannot permit that. So right now in the market, this is not very famous. Does it still happen? Yes, it does happen. I'm not denying it. There are some employees which do force about the fact that they do not want to pay the tax on this, and so they do ask the employer to take a disallowance. So it does happen in the market, but it is not very common. Does it make sense now? Yeah. Do one thing, there is an example in the book. So maybe before tomorrow's class, if you can read the example and come now, you'll probably understand this better. If not, let me know. We will discuss it tomorrow once again. Okay. Yeah, awesome. Let's cut for today. We are short of time. In tomorrow's class, we have three sections of disallowances more pending. We will discuss those 3 sections of disallowances, and then we'll complete the chapter of Pgbp by completing my small admin chapters. Yeah. By tomorrow or day after tomorrow, we should be done with this chapter. Is that clear? Yep. All right. Thank you, people. Have a good day.